Palantir has been making some serious moves lately, and the results are starting to show in a really big way. I'm going to be reacting to one of ARK Invest's most important analysts, Chief Futurist Brett Winton, as he comments on Palantir. Palantir's on a bit of a run. The stock's at all-time highs. They've just crossed a huge milestone, over $1 billion in revenue for a single quarter. They've raised guidance again. They're profitable. They're growing. But what I think makes it really interesting isn't just those headline numbers. It's how they're building themselves into a position that's going to be very hard for others to challenge. You've got enterprise adoption picking up in speed, government relationships becoming easier to expand, and a product that's more like an operating system for data than a traditional piece of software. A lot of people see the valuation and stop there, but if you dig deeper into what they're actually doing, you see why the market is treating them differently. That's what I want to focus on as we go through this clip. The strategy behind the numbers. Check this out.
Palantir is at a new all-time high. It's trading up 7%. They just raised, everything's great. $410 billion market cap on what's expected to be, let's say, $4 billion in sales this year. They crossed the quarterly mark of $1 billion for the first time ever.
One quarter doesn't change much on its own. What matters is the trend, and Palantir has been showing the same pattern for a while now, setting expectations, beating them, and then raising the bar again. The valuation might seem high if you only look at one metric, but when you factor in consistency and positioning, it does start to look a little bit more understandable. Palantir is now operating at a $1 billion a quarter run rate. In the world of software, they are still fairly small, but you can't just put in strong growth if there's no product when you're operating at the $1 billion level. This is also where the credibility starts to build with bigger investors. When they see a company not just growing but delivering predictably, it changes how they allocate capital. It's not about chasing a spike, it's about trusting the long-term path of the company.
The company is profitable. I mean, it's not like that profitable, you know what I mean? But like, I have never seen a company trade at 100 times sales where it's just the excitement in and around this. I mean, you would say this is like, you can go back 25 years and you could look at like price to sales multiples or this or whatever, but just this seems a bit egregious. And so I guess at what point, this is the 7th largest holding as I'm looking at ARK Invest holding, at what point do you say this is one of the biggest bubbles in stock market history on an individual basis? Now you could say, well, you know, NVIDIA's got a $4 trillion market cap, or Microsoft has. Well, they also have like I don't know, what is Microsoft going to do? $300 billion in sales this year or something like that. You know what I'm saying? So help me understand Palantir, because I've referred to this as the dumbest fucking stock I've ever heard of, like, or seen in the market. Like it just doesn't make any sense to me. But obviously the people want it. So give the people what they want, I guess.
Well, so the way to, I think, to understand it is think about the way software revenue flows through the stack, right? I go out and I buy, I don't know, think of like a narrow special purpose software as a service, MindBody or something. I'm like a set of, gyms, and I need to have like the application that's built specifically for me to manage appointments and stuff. And so there's a software as a service product attached to that. That software as a service company takes that, and then they spend on kind of some platform as a service type things like database, MongoDB, or maybe they spend on Palantir or something to help them manage. And then the platform as a service companies then spend on infrastructure as a service, like they go to AWS or they go to Google Cloud, to then actually run their underlying computer. And then the hyperscalers, these infrastructure as a service guys, then spend on chips to support it. Used to be CPUs, now GPUs. Well, what's happening is that we think that the top of that funnel is kind of like narrowing and it's breadthening out, where the gyms of the world are no longer going to go to MindBody. They're going to be like, hey, we need like an appointment app. Let's just spin it up ourselves. We can just, vibe code the specific product we need. So why am I spending for this off-the-shelf software that's hard for me to learn when it's easier for me to do this function by just like coding it myself? In order to do that, you need to have a good platform that keeps track of all of the things you developed and helps you to run them. And that's what Palantir and Foundry basically do.
This is where I think Palantir separates itself from most software companies. If you look at a typical SaaS product, it's built for the masses. One size fits all. You buy it, you adapt your workflow to match it, and that's the deal. Palantir flips that. They give organizations a foundation, Foundry, that lets them build exactly what they need with their own data at the core. That's a big shift. It means a hospital can build tools for patient flow, an energy company can design systems for predictive maintenance, a bank can roll out analytics for fraud detection, all using the same platform. And now, with AI becoming standard in almost every department of large companies, having that flexibility is even more valuable. It means they're not just selling software, they're enabling companies to build their own future-proof systems. That matters.
Now, that's like a narrow example, but across a broad enterprise where you have all of this data coming in, you're needing to develop effectively custom software for yourself that's built on all of that data. Then you need a really good general purpose platform for both kind of digitizing and regularizing your data, and then attaching the custom software that you're going to build on top of it. And so kind of I mentioned this like AI software spend, that's not, we think actually maybe as little as 10% of that is going to be on traditional software as a service. A lot of it, instead of starting at that layer, is going to flow into the platform as a service layer, which Palantir provides. And so at Arc, we use Foundry, we use Palantir, we're spinning it up because we think it's the better way to manage kind of like the data on the companies that we're analyzing, to do underwriting of companies, to like intelligently apply kind of AI language models against that company data. And for very big enterprises that have lots of data streams and lots of raw data that they need to process, traditionally you would have just had like a machine learning team that would go after that stuff and they would find Palantir useful. But now kind of like that system becomes useful to everybody in the enterprise, where you need every single endpoint person to be able to be like, hey, I need to like develop a little software widget to help me do this thing better, faster, more efficiently, with better customer service, cheaper, provided an answer better. And Palantir is setting itself up as the operating system layer that enables all that activity.
But again, if you tell me that they're going to start accelerating revenue growth to 100% a year from 4 to 8 to 16, that sort of thing, it might grow into that multiple, but that's not happening. You know what I mean? Like, so, 50% revenue growth year over year might be as good as it gets. And so help me understand like the way you think about managing risk if this, let's just say the stock continues to go higher because we're in this crazy bubble as money is moving away from, let's say, the hyperscalers and trying to find new, better ways to express the theme. You could make the argument, well, that's why CoreWeave is up 200% from its IPO or more, that sort of thing. At some point, isn't this the poster child for just a bubble away from the most defensive ways to play it, which you just kind of articulated with the hyperscalers and the like?
So like, I think you have to you're presupposing that this is just a function of capital trying to find the best way to play it, as opposed to like our process is for all of our companies, we go forward 5 years. We say, what is the top line going to be? What is our estimate for kind of like their gross profitability on that top line? And then kind of given what we think the conversion into cash flow will be, what if we're a forced seller at that point at a reasonable multiple, not an absurd multiple, can we get a return? And the return we require is 15% compounded over 5 years. That's across all of our positions. Given our expectations for what's going to happen in AI software, and then the share shifts in software from software as a service into platform as a service, Palantir is still a good underwrite on that basis. I would contend that this is not simply a function of people who are like, I have to play AI and then I'm jumping into Palantir. You can underwrite and say, hey, this is actually a reasonable return. And that's at a like I said, a non-elevated multiple. You can make a bull case where you say, well, this company is kind of inserting itself as the data custom software layer across a huge raft of very large enterprises. And that function is going to be very hard to displace into, like to move from them into another function. And so you should pay a heightened multiple for it because it's like more predictable cash flow.
The government work is another layer that people often underestimate. The new Army framework isn't a one-off contract. It's more like a pre-approved relationship. It clears away the slow-moving procurement process that usually drags these deals out for months or years. Now, instead of starting from scratch every time, the army can plug straight into Palantir's system whenever they need them. That's powerful because defense spending is not only steady, it's climbing in the current geopolitical climate. Once you're embedded at that level, it's extremely difficult for someone else to come in and take your place. Palantir is a tricky company to analyze if you rely on the usual tools. A lot of their work, especially with government, is classified. You can't just read a list of contracts and make predictions from that. But there are other signals you can watch, like the growing number of inbound enterprise deals, the depth of their government partnerships, and the fact they're showing real AI-driven revenue while many other companies are still in experimental phase. If you found this video of any value, hit subscribe. Thanks for watching.